Story title: High schoolers develop AI tool for app exam prep. Two ambitious high school students from Seattle have developed an innovative edtech tool that harnesses the power of AI to revolutionize the way students study for advanced placement app courses. Frustrated by the lack of adequate resources to support their own studies, Prady Kandala and Abhay Chebiam, juniors at Eastlake High School in Sammamish, Washington, co-founded Professor I. The platform acts as a virtual tutor, providing study guides, practice tests, quizzes, and course-specific chats tailored to app curricula. "We started this because we experienced the problem," said Kandala, the startup's CEO. "We know that if we can use this for our homework, everybody's going to want to use it for homework." Powered by AI models from OpenAI, Claude, Anthropic, and Mistral AI, Professor AI is trained on app-specific curriculum such as app rubrics, textbooks, and niche questions. The platform aims to address three major obstacles faced by students studying for app courses: inadequate teacher attention, expensive and inaccessible tutors, and overwhelming self-study materials. "Our goal is to use tech to replace those obstacles," Kandala explained. Recognizing the potential for AI to revolutionize education, Seattle Public Schools initially banned ChatGPT on student devices before making it available to ensure students can access this transformative technology. Professor AI, however, is designed to complement students' learning experience without enabling cheating. Professor AI's monetization plan is based on a subscription model, with a free plan, a $14 per month, Scholar plan, and an Elite plan for $29 per month. The startup has raised $20,000 so far and is actively seeking additional investors. Kandala and Chebiam are enrolled in a New York-based accelerator program with Antler and have assembled a small team of high schoolers working as developers and in marketing, content. With their unique understanding of app students' needs and their ability to quickly iterate and improve the product, the young entrepreneurs are poised to make a significant impact on the edtech landscape. Source: AI for App. High school students create tool that acts as tech tutor for advanced placement courses, GeekWire. Story title: AI-infused Ray-Ban smart sunglasses by Meta unveiled on Wired. Meta's Ray-Ban smart shades get a fresh blast of AI. Meta, the social media giant, has recently rolled out an over-the-air update to its second generation of smart sunglasses, the Ray-Ban Stories. The update comes with a host of new AI features, including the Meta AI with Vision, which incorporates Meta's ChatGPT-enabled AI assistant into the spectacles. This new feature will allow users to activate an AI voice assistant, access nearly real-time translation, and identify objects in their field of vision. However, users have reported that some features work better than others. Other new features in the update include video calling in WhatsApp or Facebook Messenger apps, the ability to share the wearer's view from the glasses' two front-facing cameras, and two new frame styles, the headliners and skylers. The headliners have a lower bridge, while the skylers have a cat-eye design. While the Ray-Ban Stories may still feel a little dystopian, the fact that they look like regular Ray-Bans makes them blend into daily life more than previous smart glasses like Google Glass. However, it's worth remembering that these smart shades are co-produced by a company with a history of letting its users' data fall into the wrong hands. In other consumer technology news, Freetag, the Swiss company known for making upcycled bags and backpacks, has released a new black sack, the Mono PA6 backpack, which can hold up to 24 liters of stuff and comes with a smaller detachable musette that can be worn like a sling or purse. The company says every bit of the bag is made from a single nylon material, polyamide 6, making it fully recyclable. Fresh new leaks have emerged about Google's upcoming Pixel 8a budget smartphone. The leaks came courtesy of the tech sites MySmartPrice and Android Headlines, in what appears to be a set of official, yet not officially released, Pixel promo images and a video. The materials show a variety of AI-powered updates to Google's mobile platform, like live translation, the addition of Circle to Search, support for Audio Magic Eraser, and better photo editing abilities. Finally, this week on the Gadget Lab podcast, the hosts pulled apart a smorgasbord of acronyms from throughout the tech era and examined the weird and important ways they have influenced the modern world. The episode is a competition to see who can explain the acronyms the best. Source: www.wired.com. Story title: Unveiling the hidden link between AI stock boom and surging energy demand. In an unexpected twist, Wall Street has discovered a hidden entry point into the AI stock boom, the utilities sector, traditionally considered the most mundane part of the equity market. The surge in AI technology requires an enormous amount of energy to develop and run, and utilities are perfectly positioned to meet this unprecedented demand. The AI hype has caused the need for power to skyrocket, with data centers consuming an enormous amount of energy. The S&P 500 index's utilities sector fell 10% in 2023, but the stocks have since recovered, rising 4.4% in 2024. The AI narrative has captured the biggest amount of investor interest and has the potential to be the biggest driver of the industry. Across the US, utilities are preparing for historic increases in electricity demand led by data centers and AI. Goldman Sachs Group Inc. has set up two investment baskets, Power Up America and Data Center Equipment, for clients seeking alternative ways to play the coming AI explosion. The bank is picking companies based on four categories: unregulated and regulated utilities, smart grid infrastructure, and power-generating raw materials. The Power Up basket has soared almost 28% and the Data Center Equipment basket is up more than 18% this year, while the S&P 500 tech sector has gained just 8.3% in 2024. Energy availability is a key consideration when data center operators decide where to build. Typically, they go to a local utility to discuss how much power they need, and then the utility seeks approval to build a new plant or buy electricity from third parties. Access to renewable power sources is also an advantage. Renewables and storage are a key enabler to help meet the increased demand for power. With data center developers looking for inexpensive locations, the Midwest is expected to become a hub of activity since land is cheaper than in other parts of the country. However, all of this demand can only benefit utilities if they can produce the electricity to meet it. Many energy experts are concerned that the U.S. power grid isn't prepared to handle the wave coming its way. Some investors are turning to the companies that will be brought in to strengthen the grid so utilities can adapt to the new high-energy environment. In conclusion, the AI stock boom has a secret backdoor as energy demand soars, and utilities are reaping the benefits. The AI technology surge has caused a massive increase in power demand, and utilities are perfectly positioned to meet this demand. The AI narrative has captured the biggest amount of investor interest and has the potential to be the biggest driver of the industry. Utilities are preparing for historic increases in electricity demand led by data centers and AI, and Goldman Sachs Group Inc. has set up two investment baskets for clients seeking alternative ways to play the coming AI explosion. Sources: *fortune.com. Story title: Apple explores partnership with OpenAI for iPhone AI capabilities. Apple is reportedly in renewed talks with OpenAI, the company behind the popular chatbot ChatGPT, to bring generative AI features to the iPhone. The discussions are part of Apple's wider efforts to integrate AI software that can generate human-sounding text into its devices. According to sources familiar with the matter, Apple has been discussing terms with OpenAI for the possible integration of its technology into the iOS 18, the next iPhone operating system. However, the company has yet to make a final decision and is also in discussions with Alphabet Inc.'s Google about licensing its Gemini chatbot. Apple's upcoming iOS 18 is expected to include several new features based on the company's in-house large language model, as well as a chatbot-like feature akin to OpenAI's ChatGPT. The company's push into chatbots is aimed at providing a more seamless AI experience with better privacy protections than rival AI offerings. The renewed talks with OpenAI come as Apple prepares to introduce new AI software and services at its Worldwide Developers Conference in June. The company has previously indicated that it plans to tout its features as more seamlessly integrated into its devices than rival AI offerings, with better privacy protections. The move to rely on partners for its generative AI features is also a way for Apple to potentially lessen the liability for its platform and accelerate its push into chatbots. By outsourcing the generative AI features to another company, Apple is potentially lessening the liability for its platform. The discussions with OpenAI and Google are part of a larger trend of tech companies looking to incorporate AI technology into their products. With the growing popularity of chatbots and other AI-powered tools, companies are increasingly looking for ways to integrate these technologies into their devices in a way that is both useful and privacy-focused. In conclusion, Apple's renewed talks with OpenAI and its ongoing discussions with Google are a sign of the growing importance of AI technology in the tech industry. As more and more companies look to incorporate AI into their products, the competition to provide the best and most privacy-focused AI experiences is likely to heat up. Source: www.gadgets360.com. Story title: Nvidia predicted to achieve $40 billion in iGPU sales, analysts forecast. In the rapidly evolving world of artificial intelligence, AI, Nvidia is poised to dominate the AI market in 2024, with a staggering $40 billion in iGPU sales, according to a new report. This figure is 11.4 times higher than AMD's projected sales of $3.5 billion and 80 times higher than Intel's anticipated sales of $500 million in the same year. The report, published by Bloomberg Technology, highlights the growing disparity between companies vying for a foothold in the AI market. Nvidia's AI accelerators are expected to generate nearly $50 billion, while AMD and Intel will receive minimal portions of the market share. Intel, once a dominant player in the tech market, is struggling to maintain its position, with its latest AI accelerator, Gaudi 3, expected to generate only $500 million in revenue this year. Intel's Gaudi 3 features older components, such as the HBM2E, which may impact its market presence. However, Intel can potentially explore the China route with its latest releases, as this path was originally what broadened Nvidia's AI fortunes before sanctions were imposed. AMD is in a similar position as Intel but has shown optimism with its Instinct lineup of accelerators. AMD's Instinct Michigan 300X iGPU has garnered significant interest from the industry due to its better price-to-performance ratios and consistent supply. AMD may still be in contention for the top spot, but it is too early to tell. Meanwhile, Nvidia's iGPU sales are expected to generate a whopping 80 times more revenue than Intel's. Nvidia's success is attributed to its market leadership and the introduction of the Blackwell iGPU architecture. With Nvidia's dominant position in the AI market, it seems unlikely that its position will be broken anytime soon. The future of the AI market is intriguing, and despite Nvidia's complete dominance, there is still hope and optimism for other companies. Intel, in particular, can still explore new markets to maintain its position in the tech industry. Overall, Nvidia's market leadership in the AI market is unparalleled, and its success is a testament to its innovative technology and strategic positioning. With the rapid growth of AI, it is fascinating to see how companies are adapting to the changing landscape and positioning themselves for success in the future. Source: wccftech.com. Story title: Mastering Extreme Weather Prediction with AI, Enhancing Forecast Accuracy. In a recent study, scientists evaluated the performance of 4 AI weather forecast models using Storm Ciarán as a case study. The storm caused extensive damage across Europe in November 2023, including large hail and a tornado in Jersey. The AI models were able to accurately represent the structure of Ciarán, including key features such as the storm's airstreams and cloudhead. However, all of the models underestimated the maximum wind speeds associated with Ciarán. The key advantage of using AI models to predict weather is that they are much quicker to produce predictions, anywhere between 10 to 100 times faster than physics-based models. However, AI models currently require data from physics-based models as an input for their development and to make predictions. Therefore, it is unlikely that we will be moving on from traditional physics-based models anytime soon. Instead, AI models are likely to be increasingly used alongside the traditional models, potentially improving the overall accuracy of weather forecasts. The study: Do AI models produce better weather forecasts than physics-based models? A quantitative evaluation case study of Storm Ciarán was published in NPJ Clim Atmos Sci. Source: www.yourweather.co.uk. Story title: US establishes advisory board for AI safety and security. In a groundbreaking move to ensure the safe and secure development of artificial intelligence, the U.S. government has established a new federal advisory board, comprised of high-profile industry leaders and experts. The board will advise authorities on combating AI-related disruptions that may impact national or economic security, public health, or safety. The 22-member board, set up by Department of Homeland Security, DHS, Secretary Alejandro Mayorkas, includes CEOs of leading technology companies such as OpenAI, Microsoft, Google, Adobe, Alphabet, Advanced Micro Devices, Cisco, IBM, Nvidia, Delta Airlines, and Northrop Grumman. In addition, the board features academics, politicians, and the Governor of Maryland. The board's primary objective is to provide recommendations for the safe adoption of AI in essential services that Americans rely on daily. The first meeting is scheduled for early May, focusing on ensuring the responsible deployment of AI. AI's transformative potential is undeniable, but it also presents significant risks. As stated by President Joe Biden, the board will help DHS stay ahead of evolving threats posed by hostile nation-state actors and reinforce national security. Adversaries could use AI to enable larger-scale, faster attacks against critical infrastructure, such as pipelines, railways, and other essential services. Microsoft CEO Satya Nadella emphasized the importance of deploying AI safely and responsibly, acknowledging it as the most transformative technology of our time. Other board members include the CEOs of Adobe, Alphabet, Advanced Micro Devices, Cisco, IBM, Nvidia, Delta Airlines, and Northrop Grumman, as well as academics and politicians, ensuring a diverse range of perspectives. The board's formation highlights the growing recognition of AI's potential impact on society and the need for a proactive approach to mitigate risks. As AI continues to evolve, establishing guidelines and best practices will be crucial to ensure its safe and secure integration into various aspects of daily life. Sources: *US sets up board to advise on safe, secure use of AI. 2024, April 27. Arte. www.rte.ie. Story title: Unpacking Silicon Valley's Incompatibility with Content Moderation. In the mid-1990s, 2 U.S. lawmakers inserted 26 words into the Communications Decency Act of 1996, which eventually became Section 230 of the Telecommunications Act of the same year. These words exempted any provider or user of an interactive computer service from liability for content provided by another information content provider. This led to an exponential increase in user-generated content on the Internet, but also to the rise of vile, defamatory, and downright horrible content. The hosting sites, although not legally responsible, began engaging in moderation, but this presents two problems. It is very expensive due to the sheer scale of user-generated content, and it often outsources the dirty work to people in poor countries, who are traumatized by watching unspeakable cruelty for pittances. Recently, platforms have been experimenting with AI moderation, which presents its own set of problems. First, there's H.L. Mencken's observation that, for every complex problem, there is an answer that is clear, simple, and wrong. Second, there's the cybernetic perspective, which emphasizes that for a system to be stable, the number of states its control mechanism can attain must be greater than or equal to the number of states in the system being controlled. If a platform like Meta has billions of users throwing stuff at its servers every millisecond, it has what Ashby would have called a variety management problem. There are really only two ways to deal with it: choke off the supply or amplify internal capacity to cope with the torrent. The former undermines the business model, and the latter is challenging even with 500,000 human moderators. The law of the land doesn't apply to Meta, thanks to Section 230, but beating Ashby's law might prove tough for AI. Source: www.theguardian.com. Story title: 3 promising AI stocks, led by Nvidia, nearing buy opportunities. Nvidia, a leading player in the AI industry, is set to take center stage this week as it rebounds near a buy point, along with other AI stocks such as Datadog and Dell Technologies. These companies are offering early entry opportunities as they rebound near key moving averages. The market had a strong rebound last week, with the S&P 500 and Nasdaq Composite both rising significantly. However, both indexes are still down nearly 3% for the month. Despite this, investors are advised to wait for convincing evidence of market strength before adding exposure. Nvidia stock, a member of the Magnificent Seven, surged 6.2% on Friday, putting it just above a trend line and offering a potential early entry. The stock has an official buy point of 974. Nvidia rallied 15.1% this week after Alphabet, Microsoft, and Meta platforms touted heavy AI investments during their respective earnings reports. Chipmaker Nvidia ranks on the IBD leaderboard list and leads the Elec Semiconductor Fabless Group. Datadog stock, a member of the IBD 50 list, surged nearly 5% on Friday on a bounce off its 50-day line. The stock is working up the right side of a flat base with a 138.61 buy point. However, investors should be aware that the company reports Q1 results on May 7. Dell Technologies stock, on the other hand, rocketed almost 32% after the computer hardware giant cleared Q4 estimates with a 22% earnings increase. The stock has vaulted 63.5% year to date. In conclusion, these AI stocks offer exciting opportunities for investors, but it is crucial to wait for the right entry points and consider the potential impact of upcoming earnings reports. Source: www.investors.com. Story title: Insights and Analysis from CNBC, your source for financial news and updates. In the rapidly evolving world of technology, artificial intelligence, AI, has emerged as a game-changing force, driving innovation and transforming industries. As investors scramble to find the next big winner, a new AI-focused exchange-traded fund, ETF, managed by a seasoned hedge fund veteran is making waves, surging 60% over the past year. This groundbreaking ETF is turning heads and attracting attention from investors looking to capitalize on the AI revolution. The AI-focused ETF, led by a former hedge fund manager with a stellar track record, was launched to provide investors with access to a diversified portfolio of AI-driven companies. The ETF has seen its value skyrocket by an impressive 60% over the past year, significantly outpacing major indices and capturing the imagination of investors. The surge in the ETF's value is a clear indication of the growing recognition of AI's potential to reshape industries and drive economic growth. According to a report by PwC, AI could contribute up to $15.7 trillion to the global economy by 2030, making it a force to be reckoned with. The AI-focused ETF invests in companies across various sectors, including technology, healthcare, finance, and manufacturing, which are at the forefront of AI development. Some of the ETF's top holdings include industry leaders such as Nvidia, Alphabet, and Microsoft, which are leveraging AI to drive innovation and gain a competitive edge. Nvidia, for instance, has emerged as a significant player in the AI space, providing cutting-edge technology for data centers, autonomous vehicles, and gaming. Meanwhile, Alphabet, the parent company of Google, has been investing heavily in AI research and development, using the technology to improve its search engine, develop autonomous vehicles, and enhance its cloud services. The rapid growth of AI has also spurred a surge in demand for data centers and cloud services, which are critical to the development and deployment of AI applications. Microsoft, another top holding in the AI-focused ETF, has been capitalizing on this trend by investing heavily in its Azure cloud platform, which offers a wide range of AI services. The AI-focused ETF's impressive performance is a testament to the growing recognition of AI's potential to drive economic growth and transform industries. As AI continues to mature and find new applications, it's clear that companies at the forefront of this technology are poised for significant growth in the coming years. In conclusion, the AI-focused ETF from a hedge fund veteran is a compelling investment opportunity for those looking to capitalize on the AI revolution. With its diverse portfolio of AI-driven companies, the ETF offers investors exposure to the rapidly growing AI market and the potential for significant returns. As AI continues to reshape industries and drive innovation, investors would be wise to keep a close eye on this exciting new ETF. Source: www.cnbc.com